If you run a business here in the UAE, you know that VAT is a pretty big deal. Get it right, and it's just another smooth part of your operations. Get it wrong? Well, that can turn into a massive headache. So today, we're going to pull back the curtain and demystify the entire UAE VAT return process. Our goal is to make sure you stay compliant and, avoid those penalties nobody wants. Let's jump right in.
So, I want you to really think about this question for a second. Are you sure you're handling your VAT obligations correctly? Because the answer to that can literally be the difference between a business that's thriving and one that's just getting swamped by fines and legal issues. Stick with us, and we'll break down exactly what you need to know to get this right. All right, here's our game plan. First, we'll get the basics down, what a VAT return actually is. Then, we'll walk through how to file it correctly. After that, we'll talk about the money, payments, and refunds. We'll also cover the not-so-fun part, the high cost of making mistakes. And finally, we'll wrap it all up with a simple action plan you can use right away. Okay, first things first. Before we get into the how, we really need to nail down the what. Understanding the core ideas behind a VAT return is the foundation for everything else, so let's make sure we're all on the same page here. So, what is a VAT return? Honestly, the easiest way to think about it is like a report card you send to the tax authorities. You're basically saying, hey, here's everything I sold, here's what I bought, and this is the tax I collected and paid. It's that mandatory summary for the Federal Tax Authority, or FTA, that keeps everything transparent and above board. At its heart, the whole thing boils down to a pretty simple calculation. On one side, you have your output tax. That's the VAT you charge your customers on sales. On the other side, you've got your input tax. That's the VAT you paid on your business purchases. The magic happens when you subtract your input tax from your output tax. If you're left with a positive number, that's what you owe the FTA. If it's negative, guess what? You're getting a refund. See? Pretty straightforward. Okay, now that we've got the what covered, let's get into the really practical stuff, the how and the when. This is your step-by-step guide to actually getting it done. Get out your calendar and circle this date because it's the most important one in the whole VAT cycle, the 28th. Your return has to be in the FTA's hands by the 28th day after your tax period closes. No excuses. Now here's a little pro tip. If the 28th happens to land on a weekend or a public holiday, you get a little bit of a breather. The deadline shifts to the very next business day. The really good news here is that this whole process is online, which makes life so much easier. It's really just a simple 3-step process. You log into the FTA's e-services portal, you find the VAT return section, and you fill it all out and hit submit. It's designed to be pretty user-friendly, so there's no need to feel intimidated by it. So, when you actually open up that form, you'll see a bunch of your business details are already filled in for you, which is nice. Your main job is to fill in the numbers. This includes a breakdown of all your sales, and this is where you need to be careful about knowing the difference between standard rated, zero rated, and exempt supplies. And one more crucial detail, every single number you enter has to be in UAE dirhams. All right, you've filled everything out, you've double-checked your numbers, and you've hit that submit button. Now for the moment of truth, the money part. Let's take a look at what happens next with your cash flow. So after you file, you're going to end up in one of two situations. If your output tax was more than your input tax, you have what's called VAT payable, and you'll need to pay that amount to the FTA. But if you paid more VAT on your expenses than you collected from sales, you're in a VAT refundable position. In that case, you can either carry that credit forward for your next return, or you can ask for a cash refund. Now, if you do go for that refund, just be aware that the FTA is going to take a closer look at your return. They'll review your application, and you should hear back from them with a decision in about 20 working days. Just keep in mind, if they find any discrepancies or have questions, the process might take a little bit longer. And now, we need to talk about the elephant in the room, penalties. Look, this is where things can get really serious, really fast, and that's why we're focusing a whole section on it. Honestly, understanding the cost of making a mistake is the best motivation to make sure you never make one. The number one rule of VAT compliance is don't be late. Simple as that. The first time you failed to submit on time, even if you're just 1 day late, it's an instant penalty of 1,000 dirhams. No questions asked. And if you thought 1,000 dirhams was steep, just wait. If you make the same mistake again within a 24-month period, that penalty doubles to 2,000 dirhams. The FTA is absolutely serious about these deadlines. And it gets worse when it comes to late payments. This is a perfect storm of penalties. The very moment you miss the deadline, you're hit with a 2% penalty on the unpaid amount. A week later, they tack on another 4%.
And if you're still late after a month, a daily 1% penalty kicks in. A small tax bill can balloon into a huge problem incredibly fast.
But it's not just about being on time. Your numbers have to be accurate. Submitting an incorrect return, even by accident, can cost you 3,000 dirhams for the first offense and 5,000 for a repeat offense. And that's on top of other potential penalties based on a percentage of the error, which can go all the way up to 50%. The big lesson here? Check your numbers, then check them again.
Okay, enough with the scary stuff. I know that was a lot to take in, but the good news is that every single one of those penalties is completely avoidable. So let's shift gears and talk about how you can stay on the right side of things with a simple, effective action plan.
You know, at the end of the day, VAT compliance really just comes down to good habits. You need to know that 28th day deadline like the back of your hand. Keep meticulous records of all your sales and purchases. Always file through the FTA portal before the deadline hits. Pay what you owe on time. And please, always double-check every single figure before you hit that final submit button. Make these actions part of your routine. So, we've covered a lot today, from the basic building blocks of a VAT return all the way to the harsh consequences of getting it wrong. I'll just leave you with this one last question to think about. Now that you really know the stakes, is your business truly compliant, or are you just kind of hoping for the best? The answer is in your hands. Thanks for joining me.